It is the first Tuesday of October, and that means it is Rates Day. The Reserve Bank Board meets this afternoon to consider its next move, and the consensus is that it is another move upwards. Your mortgage is going up again, but the question is by how much? The Australian economy is at a pretty pivotal point at the moment, and now economists are divided about how many hikes will be too many. Business reporter Edward Boyd joins us now. Ed, we are starting to see signs of deflation in Australia, but economists believe the RBA wants to see more before it starts to wind back the rate increases.
Yeah, we just had our monthly inflation indicator numbers come out last week, and we showed inflation in July was 7% and inflation in August was 6.8%. So inflation's starting to creep down. We know petrol prices are getting a little, well, the oil price at least is getting cheaper. It was $100 a barrel. It's now at about 88. And also fruit and vegetables are getting cheaper as well as crops recover from the flooding earlier this year. So there are some signs of deflation in the economy. Reserve Bank obviously wants to cut inflation back significantly. And the expectation, unfortunately, from economists is there will be another 50 basis point interest rate increase today. You can see back in April, the cash rate was flat. Well, it was 0.1%. There was no rate increase in April. Then since April, we've had an increase in May, June, July, August. We've got September on the screen. They're up 0.5%. And today we're expected to go another 0.5% in October. So if we go to the next page, you can look at the immediate impact on loan repayments. For a $500,000 loan, it'll be another $148 a month in repayments. If the RBA moves today, $1 million loan, it's going to be a lot more. It's $296. But if we go to the next page, you can look at the cumulative effect of all of these rate increases just this year. And you can see for a $500,000 loan, it's another $760 per month in repayments. And that obviously increases to $1,520 for a $1 million loan. So some economists, though, Laura, they do think there could just be 25 basis points today. And if that is true, then it's a sign that the Reserve Bank is starting to wind down again, which would actually be a positive for our stock market as well.
OK, well, the stock market has just opened. I don't think you can get a read on trade right now, Ed, but it was expected to jump sharply this morning. This is essentially after a strong performance on Wall Street. So what can we expect?
The market has just opened about a minute and a half ago. It's currently up about 1%. Now, we're expecting it to be up about 1.6%. So I imagine over the next sort of 10 or 15 minutes, it's going to keep creeping ahead. There was a really strong performance from Wall Street overnight. The US stocks were up about 3%. So they've had a torrid time in September in particular. The month of September was the worst month for US stocks in about 20 years. So they've started to recover overnight. It's all due to a decline in the manufacturing sector in America. So normally when there are bad signs for the economy, the market goes down. But at the moment, forecasters want to see the economy starting to unwind a bit. They want to start to see a drop in economic demand because it's a sign that interest rate rises are working. So we started to see that in America overnight, and it pushed up the markets and our markets higher today as well.
OK, it is a big day, the first Tuesday of the month. Ed, you'll have it all covered for us this afternoon. Looking forward to it. See you soon.